Okay. Okay, guys. So I'm back. Confirm me once you're able to see me now. Arey yaar. I told you not to wait for 2 minutes. Yeah, I'm suffering from cold here. Sorry for that. How can I teach if I've got a lot of cold? That's the problem. Right. Anyways. Hello. Are we done? So the first part of the question, did you guys copy it? Yeah. So I hope you guys would have got idea right now how to answer it. Okay, if at all we need to justify those 5 marks. Understand one thing, many of the students that when that particular, the earlier sum that we have done yesterday, okay, when it has got, I mean, when it has come in the examination, it was the first question actually for 20 marks. And these guys have written well, but unfortunately they thought that they have written well because their answers were correct and it matched with key, but they did not get the marks. And then once they have seen the suggested answers and all that, they came to a conclusion that okay, fine, they did not justify those 5 marks. This is not that difficult to write, so you just need to, you know. So this is what we call as writing skills. You need to have this as well. Okay. So whenever it's necessary, you have to expand. Whenever it's necessary, you have to contract, right? Whatever the kind of answer that you are trying to write. So that really helps you in getting marks in the examination. Okay. Anyways, now come to B. So we need to analyze the benefit for the company as a whole. That's B. So let's start to answer. So look at B. I'll show you the question one more time here. Okay, analyze if it would be beneficial for the company as a whole for division A to supply the lenses to division B at 120 per lens. That's what we are going to answer. Okay, now again, so you guys need to write along with me. Okay. So let's go for B. Analysis of benefit for the company as a whole. Analysis of benefit for the company as a whole. Okay. Now look at the company. What is the situation right now? Now, if you do internal transfer, then what's going to happen? The supply division has to sacrifice its external sales for the sake of internal transfer. That is what we called as opportunity cost, right? So let's calculate that first. Now I'll write it over here. Loss to the company due to internal transfer lost to the company due to internal transfer of how many units? Of 5,000 units. Okay. Is how much is the loss? 5,000 units into. Okay, so loss per unit will be the contribution, the sales that they are losing. I mean, the contribution that they are losing from the sales that they have lost. So, which is 140 minus 110, which is how much? 30 per unit, which is nothing but opportunity cost. Okay. Now, having said that, so going by that logic, how much will be your loss? 1,50,000, right? Okay. So, we understood the logic. This is because internal transfer can happen only by sacrificing external sales. So we know this already. Okay. What else? Let's calculate the benefit that the company will be enjoying because of this so-called internal transfer. Benefit to the company due to internal transfer is equal to. So what's the benefit? Earlier it used to buy from outside at 170. Now it's gonna manufacture within the company inside at 110. So earlier it used to buy from outside at 170. Now it is manufacturing within the company at 110. Correct? Into how many units? 5,000 units. That implies benefit will be 60 per unit into 5,000. That implies. So 60 into 5,000, 30, 4 zeros. Okay. How much it comes? 3 lakhs, right? 3 lakhs is the benefit. So, ultimately, the cost for the company will be how much? Already we have calculated 1,50,000. The benefit will be 3 lakhs. So, what is the net benefit to the company as a whole? As a whole, due to internal transfer is equal to, okay, 3 lakh is the total benefit minus your loss is 1,50,000. So, there's a net benefit of 1,50,000. Okay, that's it. Since the net benefit is positive from company's point of view, or you can write for the company as a whole. Okay, the internal transfer, there should be internal transfer. Okay, so that will be your conclusion. Right, Nana. So that's your answer for second part of the question. Okay. So if you want, you can explain this as well, this particular point, how the company is able to enjoy the benefit. Okay. I'll write the star mark over here. Earlier, division B, right? Division B used to buy intermediate product from external vendor at 170. Correct? Now, instead, it can buy from inside at a price of, okay, not buy, just a second, guys. Now, instead, it can be manufactured from inside at a cost of 110, right? Thereby saving 60 per unit manufactured internally. Okay, right. Right, you see what I've done is that I've just explained it. Here, we have directly taken benefit to the company due to internal transfer as how much? 170 minus 110. So directly I've taken the benefit. That particular benefit I've put a star mark over here and then I've explained it. Earlier Division B used to buy intermediate product from external vendor at 170. Now instead it can be manufactured from inside at a cost of 110, thereby savings of 60 rupees per unit manufactured internally. Okay. Right, what else? Now let's move on to the next one. I hope you guys have finished this. Third part of the question. Do you feel that divisional manager should accept the interdivisional transfers in principle? If yes, calculate the range of TP. This answer we know. So let's do it. So now C. Obviously in C what we have to do? Transfer price fixation. So C is all about transfer pricing fixation. So we need to fix the TP. We know the normal rules for fixing of TP, right? So we're gonna follow the same thing. I hope till here you guys have copied. That's why I'm scrolling a bit backward. So if you have copied, now we're gonna answer the next one. 3. Yeah. Okay. Ready? Okay, chalo. Now, so let's go to TP fixation. First, we'll start with minimum TP. Is equal to, we know the drill. So what is the routine drill, guys? Total relevant cost of supply division. In this case, division A. Okay. Same stuff. VC plus OC. That is equal to variable cost plus opportunity cost. How much here? 110 plus 30. Already get this 30. 140 minus 110. That implies 140. Okay. Okay, what about maximum TP? Same stuff what we are doing right now. You already know NMR or external buying price, whichever is less or whichever is low. So what about your NMR? Do we have anything? Yep. How much is NMR? Your external selling price, which is 410. Let's calculate NMR first. 410. Okay, minus further processing cost. How much is further processing cost? 180. Okay, so what's gonna be your NMR then? 230. NMR means the money that received division possess. Its external selling price right now is 410 minus further processing cost is 180. Okay, you just add the further processing cost, you get 180. So which means the money that receiving division possesses is 230. And external buying price is how much? 170. External buying price is 170, which we know that already. Okay. So whichever is less is your answer. So what's going to be your answer then? 170. Therefore, your TP range will be. Okay, what is the minimum? 140. 140 is less than TP is less than 170. Okay, 140 is less than TP is less than 170. Right. What is the next one we have? This one answer we know. Fourth one. D. So dual rate transfer pricing system. Two-part transfer pricing system. What you do is that just repeat what has been given in the question. I'll show you. So, advise alternate transfer pricing models that the chief executive of the company can consider in order to change the attitude of the divisional heads if they are against the transfer pricing policy. Correct? So, what you do is that take this word advise away. Okay. Now, you start this way. The alternative transfer pricing models that the chief executive of the company can consider in order to change the attitude of the divisional heads if they are against the inter-transfer pricing policy or, okay, like that, divide them into two. One, dual rate transfer pricing system. Two, two-part transfer pricing system. So this will be the first thing that you're going to write. After that, again, write the subpart, dual rate TP system. Subpart, subheading, underline that. Below that, already we have written the notes, right? So just copy paste that over here. Dual rate TP system. Just write 1 or 2 points. That's more than enough. Same goes with two-part as well. Next, E. So what is E? Calculate the range of TP if division A has excess capacity and can accommodate the internal requirement of 5000 lens per month within the current operation. If you have external additional excess capacity, what will happen? Opportunity cost will not come. That's the only change. Right. Anyway, now see here. So again, let's calculate TP range. Okay. So minimum TP is equal to total relevant cost. Okay, so what is the total relevant cost right now? Only variable cost because there is no opportunity cost. How much is that? 110. Here we can write the reason. No opportunity cost due to excess capacity available. Okay. What else you have got? Maximum TP, which is NMR or external buying price, whichever is less. So what's your NMR? 230. External buying price 170. Obviously the answer is 170. So TP range 110 is less than TP is less than 170. Right? Chalo, finish it off. That's it. We're done with this sum. Finish it off, guys, and let me see your answer once. Okay. So now you guys start giving me how many of you have done all the 4 correct? 4 or 5? Yeah, 5. A, B, C, D, all 5 correct. Give me the confirmation in the respective groups. All 5 correct. How many of you have done that? All 5. Come on, guys. Make it fast. We need to go to the next one. All 5. Okay. Okay. Good. Come on, come on. Start typing. How many of you got all 5 correct? Then 4. Okay. 3, 2, 1. Now, because it's a similar model, I expect either your options has to be 3 or 4 or 5. Anything below that, not so good. Guys, give me the answer now. Yep. Okay, 4, 4, 4, 4. I'm getting lots of 4s. Okay. Which one you guys have done wrong then? It's a similar model, right? Okay, all are 4s. Okay. All 5 except my explanation part in first point. Ah, that's okay. Your answer is right, correct. Explanation slowly you will learn, Nana. Slowly you will learn. As far as your answer is fine, that's okay. Explanation, yeah, slowly you will learn. That's not a problem. So we have got 3 people who have done all the 5 correct. Anybody else? Anybody else? Come on. Make it fast, guys. Oh, we have got 4. Okay. Yeah. I want the names. Yes, sir. First time. All 5 except your explanation part in first point. Okay, give me your names. What are your names? Give me your names. Here we have got Pooja, right? Give me your names first. Okay, one is Karthik. Who is the other one? Who is the other one? Make it fast. Pragati. Okay, right. And the other one? Ram Kumar. Okay, so we've got 4 people over here. Claps for Karthik, Pragati, Ram Kumar, and Pooja Nair. So these guys have done all the 5 perfectly right. So claps for them. Very big claps. And fantastic. All of you. Claps for them. So you've got 4 people. All 5 correct. Right? That's awesome. Okay. Fantastic. So this is the first time we have got a great number actually. Normally it used to be 1 or 2. Right? So who have done exactly correct. So that's awesome. So let's cheer up. Yeah, come on, cheer up. Right, if you're from Tamil Nadu, you can like O Podlampa. Right? Okay. Right, anyways. So yeah. Awesome, awesome. Adipoli. Right. Okay. The kind of emojis these guys are sending. Okay. So that's funny. So awesome. So shall we move on now? Huh. Now, see, there is one movie in Tollywood. In that movie, there is a dialogue that is said by it's a remake of Munna Bhai. You guys know Munna Bhai? right? Munna Bhai MBBS, right? Which is there is in Bollywood. Rajkumar Hirani, yeah. So its remake has done by Chiranjeevi in Tollywood. Okay, so the thing is, in that there is a dialogue, right? In front there is Crocodile Festival. Now you guys will not understand this dialogue unless you know the nativity part of it. Anyways, so try to do your own research and try to get the meaning of this. The dialogue name is In Front There is Crocodile Festival. Okay. So the point is, what is the logic behind that right now? Why am I using it? Why? Because now we are done with what is this problem number 13, right? Problem number, where is this? Yeah, 13. So we're done with problem number 13 and things are absolutely cool right now. So most of us are able to do this correctly and it's very good. So all of positive vibes. Okay, so now we're gonna get a flavor of final. So that's why I said in front there is Crocodile Festival. It's a sarcastic kind of a thing. Anyways, so let's get to the flavor of final. And now you guys are going to taste a bit. Okay, how it's going to be. You guys are ready? Give me the confirmation that you are ready. We'll start. Because I want that energy. Because now we're gonna taste a bit of Crocodile Festival. Okay, chalo, shall we? Yep. Ready for Crocodile Festival, guys? Okay. So let's take the fun side. Okay. So till here we have come very well. Perfectly. Okay. Chalo. So this is going to be our first case study. Okay. This is part and parcel of your TP chapter, transfer pricing. Perhaps this is the only case study where there will be a little bit of calculation. Apart from that, all the case studies that we're going to face so far is going to be completely theoretical. Now, this is the first case study that we're going to see where we can see a little bit of what? Problems. Okay, so we'll start the festival now. Okay, right. So students are asking me to start festival, right? We'll start. So let's go to festival number, problem number 14. You guys are with me? Right? Okay, chalo. Slowly we'll taste. Come on, Murshi. Come on. Okay. Right. Chalo, let's start. Okay. So, Rest Easy Company is a rapidly growing startup in technology sector. It develops customized ERP packages for clients across various sectors. Okay. So, yeah. Just a second. Okay, no. So the business comprises primarily of two departments. One is consultant department, the other one is customer support department. Consultant department has highly qualified professionals for management, accounting and technology background who approach clients as a team and work out solutions that meet their needs. Okay. Customer support personnel are in charge of IT implementation and provide support through telephone, email or on-site. Currently, the strength of the consultant departments is 200 while that of customer support is 150. Okay. ठीक है समझा all of you? Right. Yash, the founder and CEO of the company, is very passionate about this business model. To deliver high quality product solutions, he believes that his staff should be well trained and up to date with developments in their professional fields. So he wants them to be trained well and updated. Therefore, Rest Easy provides periodic training to its staff in-house. All employees are expected to undergo 2 weeks of training annually. A training department has been set up with qualified trainers in various fields who provide periodic training sessions to both the consultant as well as customer service departments. Okay. The training department has 5 trainers. Training sessions are aimed at providing skills that the executives need to provide better service to their clients. This in-house focus of high quality delivery is a key factor that Yash believes would set apart Rest Easy from its competitors. So he believes that this will be his competitive advantage. So he believes that that will give him his competitive advantage. Okay? Right, Agla. Now, in addition to delivering training sessions, trainers are responsible for developing training material for routine, ongoing as well as specialized training sessions. They attend conferences, train the trainer sessions, and subscribe to journals to keep themselves up to date with various developments that the consultants and the customer support executives need to be aware of. At the beginning of each year, heads of consultant and customer service departments advise the training department on the expected number of training sessions that their staff would undertake. Expected number of training sessions. In special situations where development needs to be communicated rapidly, extra sessions can also be conducted. Now, the training department budgets are prepared based on these needs. Okay. Transfer pricing is based on that training cost allocation. Okay. Cost incurred by the training department is allocated to the consultant and the customer service department based on the training sessions availed by both the departments. Okay. This is also important sentence. A standard code, that is transfer price based on budget, is provided at the beginning of the year. At the end of the year, actual cost is allocated based on actual training sessions of each department. Each of the user departments use the transfer price to prepare their individual budgets. This is also an important sentence. Say they use transfer price to prepare their individual budgets. That further gets built into their pricing models used for billing clients. Very important. One of the metric for manager appraisal is also the financial performance of their individual departments. Okay, so which means you will get your incentives based on your financial performance. So which means there is incentive area as well. So if you don't perform well, then your appraisal will not be that good. Hence, managers of both consultant and customer service department are very cost conscious. Figures for budget and actual cost for 2018 of the training department are as follows. So this is about training department. As you can see, the actual salaries are more than the budget salaries. The actual depreciation are more than 2.5 times. Actual software licenses is high. Actual conference travel for train the trainer sessions is also high. Actual telephone expenses is high. Actual training supplies is high. Actual trainee lunch is high. Total actual expenses is almost like, we can say, 1/3 of it got increased, almost like 30%. There is an increase. Consultant and customer service departments are charged based on the number of training sessions actually availed. Details of the training sessions for each department are consultant department, there is no problem. They have given the budget of 100 and they have actually attended 100 sessions. But customer service, they have given a budget of 100, but they have attended only 80. Now that's a problem. Okay, because they did not attend how much they have budgeted. Now total will be 200 and 180. So we have a problem of goal congruence over here. So what is that problem? Let's see. In accordance with the above explanation, the training department quoted a rate of 14,800 per session based on the budgeted cost and budgeted training sessions. Budgeted cost is 29,60,000. We can see that over here. And the budgeted training sessions is 200. We can see that over here, right? So 29,60,000 for 200 training sessions, they have quoted it. Actual cost per session is 38,25,000 divided by 180, right? So cost overrun of 6,450 per session, a jump of 44% from the original quote. Consequently, a meeting was called that was attended by the managers of the consultant, customer service and training departments along with the CEO Yash. The user departments were unhappy, frankly, obviously, common sense, because they thought it's gonna be this much, whereas actually it is this much. So the user departments were obviously unhappy with the higher charge. Manager of the consultant department raised the following concerns. So what are the concerns that the consultant department manager has raised? First one, the market rate for similar trainings provided by the external vendors was only 12,000. I accepted a transfer price of 14,800. Chalo, I thought that okay, in-house training program will be more customized towards what? End user clients. Therefore, I accepted for little bit of a markup, which is 2,800. However, if the department is actually going to be charged with 21,250 per session, he would rather source the training to the outside vendor. That's what he's saying. That is his first concern. Second concern of the consultant department manager. What is the second concern here? B. Further, he pointed out that while his department had adhered to its commitment of 100 training sessions, the customer service department has availed 20 training sessions less than its commitment. Reviewing the cost structure of the training department Most of the expenses are fixed in nature. Therefore, when the transfer price is based on the actual cost and the actual training sessions, the per session cost has got inflated. Correct? I hope you guys are getting the logic. Anyway, if you don't get the logic for the first time, second time reading or third time reading, you'll get it. Because the customer service department did not undergo the entire 100 sessions, he questions why he should bear the higher allocation of cost due to variance in the actual and budgeted usage of training sessions of the customer service department. Okay. Next, manager of the customer service department explained that the variance of 20 training sessions is on account of the executives handling high priority work pressure that did not allow them enough time to complete some of the training sessions. At the same time, she contended that she should not be charged for those 20 sessions for which no training was availed. Now, manager of the training department explained that the 5 lakh cost overrun on salary was due to new hire of a trainer. The trainer's experience is very valuable to the company, and hence to get her on board, the company had to offer a higher pay scale. Depreciation on the office equipment was higher by 3 lakhs due to the higher replacement cost of the aging equipment. A specialized software license resulted in an excess spend of 25,000. The manager argued that the rest of the expenses were normal increases which were not controllable. Okay, coming on to Yash, the CEO, understandably was not happy with the cost overrun. Higher internal transfer price to the end user departments, that is the customer service and the consultant department, would affect the employee morale. Obviously, they'll get demotivated. However, even though a cheaper option was available from outside vendor, he could still foresee the value of investing in the in-house training programs. Intangible benefits from these customized sessions would definitely help the company's growth. To conclude, he was not willing to give up, to be very honest. Who? Yash. He was not willing to shut down the training department. At the same time, he had to resolve the dispute resulting from the internal transfer pricing in an amicable way. Like profits, teamwork is also critical to success. Right now, that's not good. There is no teamwork right now. So you are required to first one, identify the threats to goal congruence due to internal transfer pricing. Second, during the meeting, an alternate transfer pricing methodology based on two-part transfer pricing system was formulated. Costs would be segregated into fixed and variable categories. We know that. A transfer price for each category would be arrived based on budgeted cost and budgeted usage. The standard rate for fixed cost will be applied to the budgeted training sessions and charged to the user departments. The standard rate for variable cost will be applied to the actual training sessions and charged to the user departments. Fixed costs would be defined as those that are not directly impacted by the number of training sessions. Calculate the transfer price to be charged to each department under this particular method. Last one, evaluate how two-part transfer pricing method of transfer pricing address the threats of goal congruence as identified in question number 1. Okay, so that's your case study. So what do you guys do? Read the case study at least 2 times. Already you have done 1 time. I'll give you 5 minutes. Sir, 5 minutes can be studied 2 times. Okay, I'll give you 12 minutes then. 7:48 is the time. Okay? 7:58 should be fine. Okay, till 7:58 I'll not disturb you. You guys have to study. How is the question, Anna? Good? How is the festival? I hope you guys have enjoyed it. Okay, that expression was expected. That's sending gifts. Okay. Chalo. This is just the trailer. Okay, it's just, I can say it's just the teaser. Lot more to come. Chala. Murshi, how are you feeling right now? Right. Okay. Chalo. Now you've got 10 minutes of time. Okay. Read the question 2 times. Okay. It will be interesting actually. So this is just like a story. Okay. It will be interesting. At least this is a case study where you have got some numbers. Okay. This itself, if you feel like a novel, there are so many other novels to go. At least in this, we're going to calculate certain things. but rest of the case studies are going to be completely theory. Okay, anyways, but it will be interesting. Now you read it twice. Okay, now the time is anyways 7:50, so till 8 o'clock I'll give you time. So read that and then we're gonna solve it. Okay, shala. 8 o'clock we'll start. So try to read as much as possible, otherwise you'll not be able to understand the solution also. Because unless you know what is given in the question, you will not understand what I'm taking up from the question and what I'm writing on my own. Are you able to understand? So therefore read the question very seriously. 2 times. Already we have done it once. Start ready. Okay, I hope people are enjoying a lot. Enjoy, enjoy. Read the question, guys. Done with your reading? You're done with your reading, we'll start. It feels so good. Yeah. You guys are doing ACCA now, yeah? In ACCA P5 paper, Advanced Performance Management. 100 out of 100 marks, it will be case studies only. And that too, this case study is relatively, you can say, medium level. Yeah. You're done with your reading, we'll start. Give me the confirmation, all of you. And that too, the old syllabus guys, in fact, people who have written in Jan exam, I'm not talking about the people who are writing in July. For them, I think they were somewhere around 25 case studies, 25 to 30. That's it. Uh, yeah, maximum 25 to 30 case studies were there. But you people are lucky. ICA has released a separate document called Case Study Digest, where 15 case studies are added, 15 case scenarios are added, some 25 odd questions were added. So now you got almost, if I'm not wrong, near to 50 case studies. Okay. So, lucky boys. Lucky girls as well. Chalo. So, you guys are ready? Mushi, how are you feeling right now? How's the Josh, Mushi? How's the Josh? Yeah. I hope the Josh is very high. Tell me here whether it is high sir or low sir. Logic, what you guys are doing in your group. Sure. So, first we need to identify the threats to goal congruence. Okay, due to internal transfer pricing. Okay, sure. It's question number 14, I think so. Is it 14? See, I'm forgetting the question numbers also. Check. Where is it? Yeah. Question number 14. You got to be active here. So in the groups, I have to push you every time. Hmm? Chalo. Somebody has written. It's easy to digest the case study digest, it seems. You try digesting, Nana. Once it gets digested for you, we will rest of all will digest. Okay. Chalo. July students, they know what they're facing over there. But of course, see at the end of the day, see if it is a little bit challenging for us, it's gonna be challenging for everybody. So we are on par with everybody else. And let's I think it's interesting at the same time. So it's like a story, right? So we are trying to solve a particular story. So I think it's interesting at the same time. So let's try to figure it out. Okay, so you guys are ready with me? You're gonna write along with me, and we're gonna finish off the whole solution. You're gonna write along with me. Anyway, I'm gonna write it a bit slow, so you'll be able to understand what we are trying to deal right now. So here is the rule. So every case study here are not only case studies and the problems also. I'm gonna go with this kind of new philosophy where what we're gonna do is that we're gonna read the question first, and after that you guys are going to read the question. After that, we're gonna have a rough idea of what we are going to do. I mean, what is the solution? How are we going to solve it? And after that, we're gonna write it, because writing is very important, because ours is a descriptive examination. Eventually, at the end of the day, you have to write everything in the examination. If you can see, I hope you guys can see the difference of this solution, what I've written today, and the same problem, same question, which I've written yesterday. Yesterday, it was a much simplified version. At that time itself, I told you that you have to write a little bit more if it comes for some 5 marks in the examination. Are you able to understand that? But today, I've shown you how it has to be written. How can you expand in such a way that you can justify the marks that has been given? So if you can really understand what I've written over here, so I've just tried to, rotate it, like what can I say? I was beating around the bush, if you can see. Are you able to understand? This beating around the bush is a skill that you guys need to, really adapt. So for me, when I've written my CS examination, I have done my CS along with CA simultaneously, and I still remember in my CS executive program, my least marks were 62 or 63. That was my least. Why? Because all the papers were theory mostly, and I'm pretty good at writing. So even if I know 2 lines, I can convert that into a full page, and I can fill the entire page, and every line will seem to be relevant. You know, so that way it will really help you if you can develop the writing skills or able to understand. So it's not about how much you remember over here, it's all about how much you can put on the paper, because eventually that's what is gonna give you marks, right? Chalo. Anyways, so अब हम start करेंगे पहला question. So what's the first question? Identify the threats to goal congruence due to internal transfer pricing. So let's try to find out what are all the problems that we're gonna face because of goal congruence. Now it's not that difficult actually. This guy has anyway pointed out, our friend, who is our friend, the consultant department manager. He has pointed out everything. So from that only we're gonna write the answers right now. Okay, now chalo, let's move on. Okay, now look at your question, all of you. Because see, understand one thing. Let's do postmortem of all case studies. Okay. If you do postmortem of any case study, ultimately you'll find 3 parts. How many parts? 3 parts. We are not writing the answer. I'm just trying to tell you how a case study will look like, most of the case studies at least. So first part will be, okay, okay, chalo. Now see here, ultimately any case study can be divided into 3 parts, as you can see. The first part is a portion of your answer, I can say 30% to 50% in some cases, will be a straight copy paste from the question. When I say it will be a straight copy paste from the question, you are not going to copy paste as it is, like just like sentence by sentence. You're gonna change a bit here and there, but predominantly it will be a copy paste from the question. Yes. So basically, this is something that you guys should be happy. Obviously, absolutely happy. Why? Because it's a copy paste stuff. Obviously, you should be happy. Now, second part, copy paste concept from your brain or memory, whatever. So, what do you mean by that? Basically, it means every question will be based on a concept. There can't be a case study which is not based on a concept that you have studied. Are you able to understand? For example, you look at this particular case study, what we are doing right now. Now, this particular case study is based on what concept? Obviously, it is based on transfer pricing. Now, you know transfer pricing, that is there over here, and that you need to apply. Now here it's a problematic, little bit of problematic case study, so therefore we'll not be writing sentences as such, but the other case studies will be theory case studies. Like for example, there can be a case study based on total quality management, and total quality management is a complete theory. So which will be there in your brain over here, some 5 points to 6 points about total quality management, and that you have to copy paste again. But what is the difference between the first copy paste and the second copy paste? The first one is from your question straight away, so you need not remember anything. The second one is from your mind. So that is the reason I asked you guys. I don't know whether I've told you guys or not. You need to maintain some 50 to 60 pages of theory book. Okay, where in each and every page, each and every concept, like for example, we're going to go to so many theoretical chapters. When we go there, you'll understand. Suppose there is a concept called just in time. But just in time, one page you need to write. Of course, I'm going to give you power notes. From that only, again, you will prepare another theory book. Are you able to understand? I'm going to give you power notes. You're going to write the class notes. There is no doubt in that. But what I'm trying to tell you is that apart from that, again, separately, you need to prepare a theory book from your power notes. This theory book, you have to keep on revising it multiple times. So if you do that, then you will remember all these concepts. Then it will be easy for you to do the case study. So this is also something that I can say not difficult. Okay. So not a full smile, but still there is a smile. Now this is something that I can say. This is gonna trouble you. Why, sir? Well, because this is the analysis part. What do you mean by analysis part, sir? The concept that you already know, plus the facts of the question, must be analyzed in your mind. And finally, you have to write some analysis points and some conclusion. So this last part will be the most challenging part. But the good thing is, in most of the questions, the so-called last part, which is the most challenging part, will be around 20%, to 10%, somewhere around. Like sometimes it can be 10%, sometimes it can be 20%, max it will be 30%, which means 70% of your case study answer you are safe. Now, as we know, in our examination, obviously he is not going to give you marks for the whole question. He is gonna give you stepwise marks, question-wise marks, and all those things. So obviously, when you are 70% of your answer is right, say for example, if this case study is 20 marks, anyway you are going to get at least 10. At least 10. So you're already on the safer side. So there is nothing to worry. Are you able to understand? So which means, to be very honest, contrary to the popular opinion among the CA final students with respect to Scmpe because of case study, it is not that difficult actually. Yes, you need to have a little bit of patience when you're reading those lengthy questions. Yes, you need to have a little bit of patience when you're writing the answer. That's it. It's all about patience and perseverance. So I don't really feel that it's going to be that difficult because to be very honest, Anna, especially people from Kerala and Delhi, Kerala. Yes, right. These two areas people can easily connect with ACCA. Why? Because these are all the areas where more people are doing ACCA. Are you able to understand? Whereas other areas, people you will not be probably able to connect because if you see ACCA or SEMA UK, you take any of those international courses, all the papers, at least in our CA final, it's only Scmpe, one paper where you have case study. In those examinations, all the papers, all the subjects, 100 marks in the final level, something equivalent to final level, are case studies. 100 marks, and that too, you are not having it for 100 marks, right? It's around 25 to 30. Of course, remaining 25 to 30, you'll get case scenarios, which is just like case studies only, but it is smaller ones. So, technically speaking, around 70%, 70 marks you'll be getting from case studies and case scenarios in your examination. But there, it's 100. And that too, in ACCA, there are only 3 questions 50 marks, 25 marks, and 25 marks. You can imagine a 50 mark question, how big it's going to be. Are you able to understand? So, it's not something that is really difficult because you should just get used to it. So, for the first time, yeah, it feels a bit, unnerving, but that's not the case. Are you able to get me? So, I hope you guys are with me. Arey bol yaar. So, I've seen a lot of gifs these guys are sharing in groups as a reaction. Okay, is this clear? So, this is how we're gonna approach each and every case study. So, the first part, very easy from the question, no challenge, nothing doing. Second part is also once you prepare the theory book, 50 to 60 pages. If you can't remember, then at final level, it's really something that's questionable. Okay. Third part, yes, it's going to be challenge, but still, see, of course, we're gonna learn the third part, we're gonna write it. But still, if something happens, also you need not be at risk because 70% of the answer is already there in your hand. Are you able to get me? क्या रे कैसा लगा case study ka postmortem? I hope now at least you should have a little bit of confidence back. right? So this is the way we're gonna do. We're gonna do this particular way. Many of the people, unfortunately, they don't know that this is the way they have to really approach a particular case study, unfortunately. And that's why they find it very difficult, because for everything there is something called right approach, and that's what makes things easier. Having said that, now straight away let's get to our case study. Now, the first question is threats to goal congruence due to internal transfer pricing. Right, let's start with that. Okay. Now you guys are going to write along with me simultaneously. Okay. Chalo, let's start with the first one. Threats due to goal congruence. I mean, okay, right. Let's write the heading. Threats to goal congruence due to internal transfer pricing. That's gonna be our heading. Threats due to goal congruence due to internal transfer pricing. Let's shade this a bit. So you guys are ready? Yeah. Chalo, now let's start. Now let's discuss first, so that we'll be having an idea. And once the discussion part is done, then we're going to go with the answer. We're going to write and you guys are going to write simultaneously. Right, all of you guys are ready. Chalo, we'll start. Okay, now look at the threats to goal congruence. As I told you, it has been given to us straight away by our friend. Who is our friend? The consulting department's manager. So look at the first threat. The user groups. What do you mean by user groups? The consulting department as well as the customer care department, right? The customer service department. These two guys are the user groups. If you can look at them, the consulting and customer service department, they are having a feel that this so-called Moku training department is not controlling their cost. That is the first concern. The user departments, listen carefully guys. I'll be doing my explanation part. After the explanation part, I'm going to go with what? The solution, and you guys are going to write simultaneously along with me. Am I clear? So listen carefully. The user departments, which is consulting and the customer service department, they are having a feeling that the training department, that particular Moku fellow who is responsible for all this mess, is not controlling his cost. Are you able to understand? So why do they feel that he is not controlling his cost? Why? Because if you can look at the logic, the actual cost gets allocated to the user departments. Your actual cost is getting allocated to the user departments. Means what? Your internal transfer pricing is based on actual cost. We have seen this already. When your internal transfer pricing is based on actual cost, if you guys remember, in cost-based transfer price, when I was teaching you the concept of cost-based transfer price, I've used this word. What is that word? Burden gets shifted. I've used this exact word. What is the word? Burden gets shifted. The supply division, when the transfer pricing is based on cost, shifts its burden to the receiving division. Why? Because no matter whatever the cost that supply division incurs, anyway in the form of TP it will be required from the receiving division or the purchasing division. Therefore, the burden is completely shifted, correct? Which is good or bad? Which is bad, because that encourages the inefficiency of the supply division. Now, same logic is happening over here. If you could see here, the training department is actually charging TP based on cost. That too not based on budgeted cost. They are charging transfer price based on actual cost that the training department has incurred. Because of this, what happens? The entire burden gets shifted to the user departments, that is the customer department as well as the consulting department, and therefore they feel that the training department is not at all efficient in controlling its cost, because the burden gets what? Shifted. And therefore that is affecting the financials of the user departments, which is consulting and customer service, and that will affect their incentives. When their financial gets affected, their incentives also gets affected because their performance gets affected, right? The performance measurement gets affected. Anyways, that is problem number 1. Cost-based transfer pricing. That's the problem number 1. Problem number 2. If you look at Yash, he's a believer of in-house training because he believes that this particular in-house training is going to give them the edge, the competitive edge. But if you look at the problem over here, the outside vendors, if you look at the question, they are providing at very less 12,000 per session, which is very cheap. Are you able to understand? It's a substantial reduced price. If you look at the question, it's quite clear. Whereas here, what's happening? The budgeted TP was somewhere around 14,000. And if you look at the actual, it's going touching 20,000. Where is 12,000 and where is 20,000? And if there is such a high cost of training, here we are not talking about TP, we are talking about cost of training. And that will become the cost for user departments, right? Who has to bear this? User department has to bear this cost. And what will happen to their financials? And their financials is going to get what? Affected. Are you able to understand? And that too, these things are not among their control. Are you able to understand? It's purely uncontrollable. See, if your transfer price is very high, if training department is charging a high transfer price based on their own actual cost, which is very high when compared to the budgeted cost, and you're charging the same to the user departments, which is consulting as well as customer service, then ultimately the user departments will get demotivated because their financials are getting affected, their performance is getting affected, their incentives or bonus is getting affected because of something which is beyond their control. The actual cost of the training department is not within the control of the user departments. Can the consulting department manager control the cost that is being incurred by the training department? No. Can the customer service department manager can control the cost that is being incurred by the training department? No. Which means as a consultant department manager or as a customer service department manager, I am getting affected because of something that is beyond my control. This is very important point. Here after at least 10 to 15 case studies, you will be getting the same point. Means when you are measuring a performance of somebody, you should always take into those factors which are under that somebody's control. Whenever you are trying to measure performance of somebody, you should take into account those factors which are under the control of that particular somebody. You should not take those things which are beyond their control. You cannot take something that is beyond control of somebody and say that somebody has not performed well. It's a basic common sense. So when you are trying to measure performance of something, you should take only those things which are under their control. Are you able to understand? And that's the concern number 2. So therefore, we may say that, okay, Yash, maybe probably he should be able to reconsider that in-house training or the training that is available outside at a relatively cheaper price without compromising on quality, obviously. Right. Coming on to the third problem. So the first problem was the training department is not controlling its cost. The second problem is these user departments are getting affected due to internal transfer price, which is due to the actual cost of the training department, which is beyond their control. Whose control? User department's control. And coming on to the third part, this is the fight between two user departments. Consulting department, customer service department. If you look at the question, the customer service department did not meet its 100 training sessions because the actual training sessions were only 80. Now see what's going to happen. If you look at the nature of the cost of the training department, majority of its costs are fixed in nature. When majority of the cost of the training department are fixed in nature, what is the logic behind that? It does not change. But if you see what's happening over here, those fixed costs are being allocated to the user departments on actual training sessions. How can you allocate fixed cost on actual number of training sessions when it's not going to change? It's going to remain what? Constant. Only the variable cost should be allocated based on actual training sessions, because the actual training sessions will differ from the budget training sessions. Are you able to understand? So now what has happened here is, initially, no, listen carefully, the whole story. Listen carefully, listen carefully. At the beginning of the year, user departments will give their budgeted training sessions input to the training department. That 100 sessions we will attend. Consulting department gave the same, gave a note for 100. Customer service department also gave a note for 100. They said we will attend 100 training sessions. Based on the training department has calculated its cost. How much is going to be the cost? How much it is going to cost us for 100 training sessions for each of these departments. And based on that, they have calculated their budgeted cost, and that was communicated to the user departments. Now, user department, me, consulting department or customer service department, whatever it is, I got the information of budgeted cost from the training department. So that will be my IP cost, which is one of my cost, and considering that IP cost, which is based on budgeted cost of the training department, I have priced my services to my client. Again, I repeat, the user departments, that is consulting as well as customer service department, based on the input received from the budgeting cost, based on the input received from the training department about its budgeted cost, I have guessed my TP cost, that is intermediate product purchase cost. Based on that, I have made my pricing decision, and accordingly I have communicated my pricing, that is billing, to my clients. Are you able to understand? I'll give you a small logic. Suppose, let's say I'm a user department. Training department gave me an input that 10 rupees will be the cost per training session. I took this 10 rupees. I know that there will be 200 training sessions. So totally it will be 2000. That will be my IP cost. So thinking that 2000 will be my cost and another cost put together is 3000. Total cost will be 5000. I added some 20% markup. Okay. And I have fixed 6000 as my selling price. And I have communicated the same to clients. This has happened. Now we have come to end of the year. Now once we have come to end of the year, what is happening? This Mokku fellow training department says 2000 rupees is not the cost. Now the cost is 3000. Already you have billed for 6000. If the cost is 3000 IP cost and your own cost is 3000, then your total cost will be 6000 in the example which I gave you. Where is the question of profit for you? This is the problem for user departments. At the beginning, you told something based on your budget cost. We took that as a base and then we have calculated our own cost, then put the profit markup, and we have already given the pricing to our clients. And the billing has already happened. And now all of a sudden at the end you say that my actual costs are very high when compared to my budget cost, and you want to recover based on actual cost. Are you able to understand the problem of the user departments? Samjha? So this is the problem right now. Okay, now the whole case study goes this way. Now first we need to explain all these problems and write it down, which creates a goal conflict. After that, there is a solution that is already provided by the question, which is two-part transfer pricing system, which we know already. We know the concept. We're gonna put that. We're gonna solve it. And based on two-part transfer pricing system, we're gonna find out how much is going to be the TP. That is the answer for the second part. Once we are done with that, we're gonna go for the third part, where we're gonna answer whether this so-called solution that is being given by the question, which is that two-part transfer pricing system, whether in reality did it really solve the problems that we are going to write in the first part of the question. The first part of the question is where we need to explain the threats to goal congruence. The second part of the question is a solution, and the third part of the question is whether this solution has really solved the threats to goal congruence, which we have written as the answer of the first part. Are you able to understand? So the first part is the threats, the second part is the solution, the third part is whether the solution has really solved the first part. Are you able to understand? Now, so let's try to write this. So that is the answer for this whole question. So now that we have discussed this in brief, let's start answering. Now, let's start answering the first part. which is okay, threats to goal congruence. I'll write it this way. You write along with me, guys. Okay, threat 1, 2, 3. Totally, we have got 3 threats right now, okay, which we have discussed. Okay, first threat. So the problem is with user groups. So what is the problem in the question? User groups means obviously consulting and customer service departments. Okay, I'm not going to write again. User groups means consulting and customer service department. They are concerned that the training department is not controlling the cost. Training department is not controlling cost. Okay, what is the reason behind that? Because actual cost is allocated to user departments or user groups, whatever it is. Actual cost is allocated to user departments, right? So this may lead to conflict between training department and user groups. When I say user groups, obviously I'm talking about whom? Yeah, you guys know the answer. You guys know the drill. Consulting as well as what? Customer service department. Okay. So this is the answer for the first part. So what we are doing right now is that we are simplifying the whole solution so that it will be easy for us to what? Revise. You got this? Are you guys copying simultaneously? Are you guys are with me and are you guys are copying? Give me the confirmation. I'll go to the second problem. Second, threat to goal congruence. Give me the confirmation in the respective groups. Yes? Now, okay, moving on to the second one. What is the second threat? Now, this guy CEO is he believes that in-house training all gives him the competitive edge and all those things. Okay, so but the problem in the question is the outside vendors they actually provide at a much reduced price, which is 12,000 obviously over here. Okay, now see here. Second thing is performance. Okay, assessment of user groups. Okay, are based on their financials. What do you mean by that? It means that if you want to measure the performance, I mean the performance measurement of both the groups, user groups, that is consulting department as well as what customer service department, is based on their financials, that is numbers of their respective groups. Okay. So high TP affects financials, obviously, of those respective groups. Correct? This affects employee morale as they are beyond control of the managers of user groups. Now I'm writing user groups to keep it short. In examination, what you have to do is that you need to write it fully. That is managers of consulting department as well as the customer service department. Or you will understand because it's beyond their control. So that's problem number 2. Are we done with this? Now let's move on to problem number 3. Now what is the third threat? So most cost of the training department, they are fixed in nature. If you can look at there, and that has to be incurred irrespective of the training sessions. Let's write that first. Okay. Should be incurred irrespective of number of training sessions. Right? So most costs of the training department are fixed in nature and that should be incurred irrespective of the number of training sessions. Correct? Now if you look at the question, these costs are obviously being allocated to the user department based on actual training sessions. The budgeted target price is used by the user departments to determine their billing model, to their respective clients. So therefore, the budgeted transfer price should not be much different from the actual transfer price. Okay, that's most important one, which is what I've told you. Budgeted TP is based on budgeted training sessions and is used as a base for billing clients. So it is very important. Okay, so that your budgeted TP is not different from the actual TP. Okay. Chalo. You write the same way, exactly the same way that I'm writing, okay? Don't make any changes. Right, now look into the question. Every time I write something, look into the question and see how it is being written. Okay, so it's very important that budgeted TP is not much different from the actual TP. Why? Because based on budgeted TP, you're billing your client. So if your actual TP is different than the budgeted TP, what will happen? You've already billed your clients. Now you can't change the selling price, but your cost has got increased and you're not left over with anything, which means your profit will be very less. And on the other hand, your performance is measured based on your profit. financial metrics, which means when your profit is less and you're going to get what? Less incentive. All this happened because of something that is beyond your control. That is the cost of the training division. Are you able to understand? Right, that is a problem. Another important problem is there. If you look at the question, internal transfer price is based on budgeted 200 sessions. Okay. So let me write it over here. Internal TP is based on budgeted 200 training sessions. Okay. So here what happens? If customer service department did not adhere to its commitment of 100 training sessions, since most of the costs are fixed in nature, your cost per training session will increase. As customer service department, okay, does not adhere to its commitment of 100 sessions, since majority of training department's cost are fixed in nature, since majority of training department's cost are fixed in nature, what will happen? So the actual cost per session will inflate. Will inflate means it gets increased like anything. Will inflate, which has to be borne by consulting department also, despite meeting its commitment. So this will lead to friction between two user groups. Okay, that is the customer service department as well as the consulting department, and that's not good for the company. It's not at all good. That's it, guys. So finish it off. We're done with the first part of the question, where we have clearly explained what are the threats to what? Goal congruence. I hope you guys have also written this along with me simultaneously. Only then you will remember. If you don't write, you'll not be able to remember. Okay? Very serious. Unless you have got some gifted memory. Guys, finished? Give me the confirmation that you have finished and we'll move on. Okay. We'll move on to the second part of the question. So if you write like this will be very easy for you to remember and write it in the examination hall. All you have to do is convert this box into a sentence. That's it. Beyond that, nothing else you have to do. Okay. Another important thing, guys, listen carefully. Why I named this as power notes. Okay, I'll make a separate video. You can watch it in my YouTube channel. Many people don't know why I called it as power notes. See, another important thing is that I've seen certain students, they are going with something called short notes. Short notes in the sense, suppose if a solution is like 2 pages, they'll read that in 3 or 4 lines, or half a page for that matter. Now, to be very honest, my opinion on that is divided. Why? Because okay, yeah, you can revise it very fast, but what will you do in the examination hall is the major question. Because in examination hall, if a question has got a solution of 2 pages, you need to write the answer equivalent to 2 pages. Then only you're gonna get the full marks. If you just read some 3 lines and you try to remember that 3 lines, unless you know how to convert that 3 lines into those 2 pages, you'll be doomed in the examination hall. This is very important. The intention behind power notes is that only. That's the reason I did not name it as short notes, or I did not name it as summary notes. Why I named it as power notes is because we're going to write our notes in such a way that we should be able to grab those entire 20 marks in the examination. Okay, so that we are going to cover all the points. At the same time, we are going to make it simplified. So that's the whole plan of this entire notes. Are you able to understand? You will understand slowly once we do the journey along with me. You will be able to understand what we are doing. Anyways, now give me the confirmation that you guys have copied. Okay, I've got the confirmation. So once you are copied, we'll move on with the second one. All of you, give me the confirmation. Fat now. Message and tell me that you guys have copied. And also tell me any doubts so far with respect to only the first part of the question. Threats to goal congruence due to internal TP. I did not like this. Have you guys finished? Come white, right? In our childhood, we used to love coloring, right? I don't know how many of you have loved it. I actually loved it. Anyways. Right, shall we start? Now let's move on to the second part of the question. What is the second part of the question? Yeah. Okay, that guy has provided us the solution. What is that solution? Two-part transference system. And don't tell me that you don't know. We have already discussed it. Yes or what? We already know what is two-part transference system. Correct? Right. So, two-part TP system. You already know what you mean by two-part. One part will be towards compensating variable cost. Other part will be towards compensating fixed cost. We are already aware of it. Okay. Or you can also call it as lump sum consideration. Okay. Chalo. Two-part is equal to variable cost part compensation plus fixed cost part compensation. Right. Anyways, we are aware of this. Now let's do the calculation. So now what we have to do is that we need to segregate all the costs that has been given in the question into variable and fixed cost. And normally, how will we segregate into variable and fixed? Based on units. Something that varies with units is variable cost. Something that doesn't vary with units is a fixed cost. But here we don't have units because it's a service sector. So in service sector, we need to figure out the base quantity. To identify which is variable and which is fixed cost, you need to figure out the base quantity. Now, what is the base quantity here? Training sessions. Let me write that. to segregate costs into fixed and variable, we should know the base quantity, and the base quantity is number of training sessions in this question. Okay, now what do you mean by that? It means that any cost that changes with number of training sessions is a variable cost. Any cost that remains constant irrespective of the change in number of training sessions is a fixed cost. Again, I repeat, any cost that changes along with number of training sessions is a variable cost. Any cost that remains constant irrespective of the number of training sessions is a fixed cost. I hope that's clear. Now let's do that. So first I'll write first column particulars. Then I'll have budget column. Obviously I'll have a budget column is enough. Variable or fixed column. Where in this column I'm going to write something as variable or fixed. Okay, let's have a look into that. So we'll start with the first one. You guys are going to give me the answer. Type it in your respective groups when I ask you the question. Okay, ready? Chalo. Okay, so let's start with the first one. First one is salaries. Tell me salaries, which is how much is budgeted? 25 lakhs. Has it got anything to do with number of training sessions? Okay, are the salaries are fixed or are they being paid on per training session? This much will be the salary for a particular guy. Is it like that? If the salaries are fixed, it has got nothing to do with number of training sessions. In that case, it will be fixed. So which means what is the answer that we have to write here? Fixed. Okay, yeah, I'm getting the right answers. Very good. They are fixed. Very good. Very good. All the people are typing. Fantastic. Okay, like this, you guys are going to give me answers for everything else as well. Okay, next one is depreciation on office equipment. Depreciation on office equipment. Kitna re? Budget is 2 lakhs. Has the depreciation on office equipment has got anything to do with your number of training sessions? No, sir. Irrespective of my training sessions or 50 or 100 or 150 or 200, my depreciation on office equipment is going to remain what? Same, which means it is. Okay, right, fantastic. All of you have answered correctly. Now let's move on to the next one. Software licenses for training packages. Okay. What about software license? It is 80,000 budgeted figure. Fixed or variable? Obviously fixed. It has got nothing to do with your number of training sessions. Then we have travel for train the trainer sessions. Conference travel. Conference travel for train the trainer sessions. How much is that? 10,000. Fixed or variable? Again fixed. It has got nothing to do with your number of training sessions. Okay. Let me give some numbers. 5. Telephone. 20,000. Fixed again. 6th. What else you have got? Training supplies. How much is that? 50,000. Now, this is called training supplies, Nana. Training supplies means more the training sessions, more will be the training supplies needed. Less the training sessions, less will be the training supplies needed. Therefore, it is what? Variable. Correct? Seventh and the last one. Trainee lunch. Okay, what about trainee lunch? Obviously, more the training sessions, more will be the trainee lunch. Right now, the budgeted cost was 1 lakh. So, obviously, this will also be what? Variable. Okay, yeah, that's it. Done, all of you? If you're done, we'll move on. Yeah, it's correct. Variable. All of you are right. Exactly. Yes, very good, very good. Arey yaar, it's not training sessions here. It is train the trainer. See that? Train the trainer. Train the trainer means the guy who's going to give you training, he will get trained. It has got nothing to do with the actual number of training sessions inside the company. Okay? Train the trainer is different. Okay? Chalo. Got it? Right then. Now let's move on. Okay, now if you look at the question, now we have to read the question carefully. Because in question itself, he gave us everything. What we need to do. Let's read the question carefully. We will read the question carefully and then we'll do what the question has asked us to do. That's it. We are not going to do anything special. Okay, are you guys with me? Now let's read the question carefully one more time. Already you guys have studied it 3 times. Okay, chalo, now see here. See here, what is that he's trying to tell you? Cost would be segregated based on fixed and variable categories. Did we do that? Yes. ये तो हो गया. क्या रे? हमने पूरा किया. We have prepared that, right? मुंजिच. Now, next one. A transfer price for each category would be arrived based on budgeted cost and budgeted usage. That's the next step we are going to do. And we're going to calculate a standard rate. Are you able to understand? So which means what we are going to do is that we're going to calculate budgeted cost divided by budgeted training hours. We'll be getting a standard rate. Of course, fixed cost and variable cost after segregating that only. The standard rate for fixed cost will be applied to the budgeted training sessions and charged to the user departments. The standard rate for variable cost will be applied to the actual training sessions and charged to the user departments. Okay. So we need to calculate standard rate for budgeted cost and standard rate for variable cost. And standard rate of budgeted cost will be multiplied with budgeted training sessions. Standard rate for variable cost will be multiplied with actual training sessions. Anyways, now, okay, so I'm not doing anything special over here. Whatever the question has asked me to do, I'm doing exactly the same. So I'm not doing anything special. So you guys, if you have any doubts, read the question, read the sentence one more time. Okay, or otherwise, just look at the calculation over here. You'll be able to get a better idea of how we are going to do. Okay, so let's calculate. Till here it is fixed. How much is the total of fixed? 25, 27, 27, 80, 27, 90, 28, 10. Yeah. How to write this? Okay, this 1,50,000. Okay, 28,10,000 is the budgeted fixed cost, and this one is 1,50,000. Okay, now what is that we are going to do? If you look at the number of training sessions, it is 200, 100 for consultant and 100 for service department. So let's calculate budgeted standard rate. Yeah. Budgeted fixed cost standard rate is equal to, how to calculate budgeted fixed cost standard rate? What is your total budgeted fixed cost? 28,10,000. Or let me write this way. Look at the formula. Budgeted fixed cost divided by budgeted number of training sessions. Okay, so how much it's going to be? 28,10,000 divided by 200. How much, Rana? 14,050. Okay, per training session. The next one is budgeted variable cost standard rate is equal to budgeted number of training sessions. That implies kitna re budget cost 1,50,000. That implies 750 per session. Okay, now that we have got two standard rates, okay. So one is fixed cost standard rate, the other one is variable cost standard rate, which is 14,050 and 750 respectively. Okay, so now what we are going to do, very simple. Now we're going to fix the TP. How are we going to fix the TP? Now see it. TP based on two-part transfer pricing system. Now see here. Let's write the heading. Fixation of TP based on two-part transfer pricing system. Fixation of TP based on two-part transfer pricing system. Okay, how are we going to fix? So first, we're going to fix the transfer pricing for consulting department. Okay, sure. Transfer price for transfer pricing for consulting department is equal to. Okay, so we know that it's gonna be your variable cost component plus fixed cost. Let me call it as part, okay, because it is two-part transfer pricing system. Variable cost part plus fixed cost part. Correct? Kya re? Right. That implies how much is your variable cost part? Which is 750 per training session into variable cost part will be multiplied with actual training sessions. Okay, let me write it over here. I'll write the formula. Standard rate into actual number of sessions. Okay. Plus, what about fixed cost part? Again, it is standard rate only, but you will multiply with budgeted number of sessions. Okay, so variable cost part, what you will do is that you will take the standard rate, which we have already calculated. You will multiply with actual number of sessions because variable cost varies with actual number of sessions. Whereas fixed cost, it will remain constant irrespective of the number of actual sessions. Therefore, you will multiply that with budgeted number of sessions only. Now, that implies, what is the standard rate for variable cost? 750 into actual number of training sessions of consulting department 100 plus standard rate for budgeted fixed cost standard rate is 14,050. You're gonna multiply that with budgeted number of training sessions, which is 100. With respect to consulting department, both are nothing but same. So that implies how much will be your answer? 7,000, 75,000 plus 14,50,000. 14,05,000. Right. 75,000. इसके बाद कितना है रे? 14,05,000, I think so. Is it? So that will be 14,80,000. Okay. Chalo. So that will be the TP for consulting department. Now we need to calculate the same TP for Which department? Customer service. So TP. TP for customer service department. How much, Ray? Same stuff. It's the same logic. Okay, variable cost part plus fixed cost part. So I'm not gonna write everything. I'm gonna do the calculation straight away. So what is the calculation? Standard rate into actual number of training sessions. What is the standard variable cost rate? 750 into actual number of training sessions is 80 plus for customer service department. Fixed cost standard rate is 14,050. That anyway you're gonna multiply with budgeted training sessions. You see the beauty over here? Even though customer service department has attended only 80 sessions, fixed component is getting applied for 100 sessions because 100 is budgeted. You see the beauty of it? So the rift between both these departments is solved now. That is equal to 750 into 80. 60,000 plus 14,05,000. So 14,70,000. Sorry, 65. That's fine. Okay, 14,65,000. Okay, so that's your TP. So total TP will be how much? For training department. Let us see. What's gonna be this Mukku fellow situation? For training department is equal to 14,80,000 plus 14,65,000. Okay, that implies so that will be 29,45,000 versus total actual expenses for training division. कितना रे? 38,25,000. Damn. Okay. So which means unallocated expenses, or we can also call it as unobserved expenses of training department is equal to, so what is the difference? Or we can also call it as, this one would be the right word, unrecovered. Unrecovered. So 29,45,000 minus 38 lakh. 8,80,000. Now this Mukku fellow will be under control because he is not able to recover what? 8,80,000. He'll be under control for sure. See that? You guys have got this? Let's move on to the last part of the question. With that, we'll finish off this one. So last part is whether this particular transfer pricing, what we have fixed right now, does it really solve the problem that has been faced in the first part of the question? In the first part, we have explained 3 problems, right? Okay, 3 situations we have explained where there will be a threat to what? Goal conflict. Whether this has been solved or not is what we are going to do over here, right? Chalo. Let's put third part of the question. Okay, so threats to goal congruence. Okay, let us see whether these threats have been really solved or not. Okay, if you can see, because the transfer price is based on budgets, majority of the cost, obviously the fixed cost. Therefore, the training department now it will be more cost conscious. See here. That is the first problem na, here we have faced. See here. The training department is not controlling the cost. That is the first threat. Since TP is based on budgeted cost, training department will now be more cost conscious. Okay, it will now be more cost conscious, obviously, because whatever the actual cost that is going to incur is not going to get recovered. Just like in this case, almost 8,80,000 is unrecovered cost. So that much loss the training department has to bear. Kya re? Right. So as explained above, obviously we have seen, that 8,80,000 portion of it is not getting what? Recovered. It has to be borne by the training department. Okay. But here there is a problem. Okay. Now that because the TP is based on budget cost, obviously training department now it will be more cost conscious, and obviously this 8,80,000 has to be borne by the training department. Therefore, that problem is solved. But at the same time, in the event of being cost conscious, the training department should not compromise on quality of training. For example, right now, if you look at this particular question, the training department manager's logic was, I have hired a particular person whose experience is really important for the quality of training, and for that particular person, because he is in great demand, I have to pay him a better compensation. Therefore, my cost of salaries has got increased. That's what he has answered. So the point here is, in the effort of pushing him forward, where you are not allowing him to recover his full cost, because there is a 8,80,000 gap over here, he should not try to compromise on the quality of training, and this should be taken care by CEO Yash. And that point also we have to add. Are you able to understand? It's pure common sense, right? However, Yash must take care that there is no compromise in quality of training provided. Okay, that's it. We are done with this. I hope this is clear, all of you, till here. So we have solved that particular problem of, the, what do you call, the training division being really reluctant to cost saving. Okay, now automatically they'll start saving cost, but this danger is there. So Yash must take care of the same. Okay, so ye to ho gaya. Right, moving on to the second one. What is the second problem that we have seen? Transfer price being very high when compared to the external, offerings. Where is it? See, higher transfer price affects the financials. Okay, whereas the subcontracting, the external price is somewhere around 12,000 per session outside, right? So therefore, because of the higher transfer price, it is affecting their financials. That higher transfer price is due to what? Training department, which is beyond their control, and therefore they get demotivated. Chalo, is that problem is getting solved? Let us see. Okay, now see here. Internal TP of, how much is that here? Now 14,050 plus 750. 14,050 is fixed. Okay, 750 is variable. Total will be 14,800. That is your internal TP. Okay. 14,800 is still higher than 12,000. Okay, per session. External vendor. Okay, so this is still a problem. Okay, but still it's a lot better when compared to 20,000. That is one thing. Okay, right? But one point that you guys need to understand is that, okay, fine, internal TP of 14,800 is still higher than 12,000, which is external vendor, but in-house training is more relevant and customized for the needs of end user client. That way we can at least to some extent justify this extra cost of 14,800 than when compared to what, 12,000. But there is one more point that you guys need to see here. I don't know how many of you guys have seen. What is the marginal cost of extra training session? But an important point to be noted, that additional cost of an extra training session will only be kitna hai, 750. How many of you guys thought about this point? Very important point. This is very low than external rate, correct? I don't know how many of you guys have seen this. So in that case, it makes very sense. It makes a very good sense. When you go for more number of training hours, then definitely in-house training is best. Why? Because for every additional training session, you have to incur only 750 internally, whereas externally you have to incur 12,000. Are you able to get me? That's also an important point, arguable point as well. So more the number of training sessions, it's better to train internally, cost wise also, not just quality wise. That's the beauty. Okay, so what is the last one we have? Yeah, as you can see, the variance in the number of training sessions, that's another problem that we have faced, because the customer care department has attended only 80 training sessions. Because you are dividing your total fixed cost divided by the actual number of training sessions, the consulting department has to bear more cost per training session despite attending all the training sessions, despite giving its commitment. That problem is also solved here, because as you can see, fixed costs are allocated based on budgeted sessions, budgeted number of sessions. Okay. Right. So therefore, we'll write this also. Variable costs are allocated based on actual number of sessions. So you're allocating budget based, fixed cost based on budget number of sessions and variable cost based on actual number of sessions. and majority of the cost are fixed. So majority of the cost are what? Fixed. So even that problem is also, solved. Hence, any variance in actual number of training sessions, if at all there is any changes in the actual number of training sessions, it will not impact the other user department. Got it? So that problem is also solved. Where a consulting department was really feeling bad that it got greater cost per training session because of non-commitment to the number of training sessions by the customer service department. That problem is also solved over here. Got this? That's it, guys. Okay, now copy this and finish it off. We are done with our first case study. It took time, but it's okay. So whatever the threat to goal congruence problems that we have seen as the answer of first part of the question is completely resolved. Right here will not impact. Right, guys, are we done with this? All of you? Chalo, give me the confirmation once you have copied. Yep. First, let's go to some theory chapters here. Then I'll talk about the theory book. Right now, even if I tell you, you will not understand. Because right now, we are not in a theory chapter. It's a problematic chapter, okay? Wait till we start with the theory chapter. Okay? Hello. Right, guys. Any doubts in this? Now, today, what you guys need to do is that once you're done with copying, you guys need to revise this now itself. Immediately, of course, you can have your tiffin or whatever it is. Now itself, you revise and then keep it planted in your brain. That's important. It is today. If you show a little bit of, if you are being a little bit lethargic, okay, chalo, ठीक है, बाद में revise कर लेंगे. If you even think like that, you're gone. This is the mistake that 90% of the CA students do. Don't do that. Don't show that little bit of tiny laziness. Because of that laziness, you are not going to gain anything also. Are you able to understand? Now itself you have to revise, or you eat simultaneously, you revise, no matter whatsoever till you finish of CA. Let's be a little bit odd. Chalta hai. It will go. Purida. Purinjado, Manastai, all of you. Kya this is very, 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 very important. Got it? All of you? Samjha? Chala. Right. Any doubts you can ask? Today we'll wind up the session here. Tomorrow we'll finish off TP chapter. Okay, including the additional sums. Chalo, any doubts? I'm telling you, you will be getting the best notes. Okay, with respect to the notes that you're going to get, it will be the best in the business. Okay, if you just revise these notes, in fact, now you guys are writing, right, along with the session, you need not do anything other than this. You need not touch any other source. Our class workbook, the questions book which you have got, and our class notes. Once your batch gets finished, this only I'll be releasing as a power notes. In fact, my earlier power notes, which has become viral all over the country, is based on this only. 25,000 copies it went actually. But it was pretty bad in the sense I have written it with normal ink pen on the paper, white paper, and then it was scanned. It was a photo was done, it was scanned, and then it got converted into PDF. But here I'm writing it digitally with lot of colors, so this will be lot visually appealing. The quality remains the same, but it will be a lot more visually appealing. Earlier, it used to be visually dull, but still it went viral. So you can understand the strength of the content. Just imagine that a book becoming viral where it has got no index, it has got no starting point of a chapter, ending point of a chapter, it has not got all the chapters, okay, and it just got a theory, and that too in a pretty unorganized way. And just imagine such a kind of a book becoming viral. So you guys can understand that the quality of the content is so strong that despite that it went ahead. Because my initial intention of writing power notes was not like, it was intended to teach, and my intention was that students should write it in the class, only then they'll remember, because otherwise theory we can't remember. It went with that particular logic. But then because of so much of pressure that I was forced to release that as a hard copy. Now I did not send you guys hard copy because of the changes that has happened, and I wanted to write it again. Okay, because now this has been written a lot better when compared to the earlier version. Obviously the newer version will obviously be better. Even the existing content also will try to improvise. That doesn't mean that there will be dramatic improvement, but there will be subtle improvements done. Are you able to understand? I hope you guys have understood this. Any doubts? Any doubts, guys? So shall we wind up the session then? Okay. No doubts? Revise it. Revise it now immediately after this session. And any doubts you can ask tomorrow also. No worries, before we start the session. Okay, you can put it in the group and I'll try to answer. Any doubts right now? Any doubts? No doubts, guys? Chalo, right then. Let's wind up the session. Bye bye, guys. Thank you so much for participating today. Your answers were awesome. Okay. And we're gonna stop the session. Tomorrow we'll continue. Okay, as usual. Bye bye, guys. Thank you.